Hi everyone, and welcome to this week's webinar with me, Richard Perry, Market Analyst from Hantec Markets. This webinar that I'm going to be talking about today is on another one of my favourite momentum indicators, which is called the MACD. Mastering the MACD is a technical art form that I think is very useful in terms of trading, because I think it gives you a lot of good signals, and I think it's something that hopefully you will be able to incorporate into your trading systems as you go forward, and hopefully my webinar will be helpful for you. First of all, as ever, starting off with the disclaimer. Now, I'm going to be talking about live market information, so this disclaimer is necessary, and hopefully you should read it. Just make sure you understand everything, because it is there for a reason. My series of technical webinars, I'm hoping, have now given you a bit of confidence in terms of my ability, and I've got educational experience and market experience, so I hope that gives me enough reason to be able to talk to you about these sort of things today. That is my quick bio for you. But webinar agenda, what are we going to talk about today? As I said, the Moving Average Convergence Divergence indicator. Just going to look at a few basics behind the theory of it, and then we're going to look at different ways that you can use the MACD lines, and then I suppose probably what you're all here for, which is trading signals from the MACD. And then finally, we're going to finish off today with a whole range of markets and see how they're going, because there's a lot going on in the financial markets at the moment that I think is very interesting. A lot of key breakouts just in the last day or so that fortunately gives us a lot to talk about today, and I'm hoping that you can give me a little bit of feedback, a few questions. Anytime through the webinar, I will try and answer your questions, obviously if they're relevant to what we're talking about. But yes, so just fire them over, and I will get to them as and when I can. If I don't cover them through the webinar, then please feel free to email me. I'll give you the email address at the end of this webinar, and we've had a lot of questions coming through, so please don't worry about emailing me. I will get back to you, and I do enjoy answering the emails anyway, so don't worry about it. It's more than I'm here for. So yes, it's all good. Right, we're going to start off with just a few basics behind what the MACD is. Now, last time out I talked about the RSI, which is as I said, one of my favourite indicators, but the MACD is another one of my favourite momentum indicators, and it was devised in the 1960s by a chap called Gerald Appel, and he basically decided to just bring a combination of two sets of indicator theories, really. I mean, to call the MACD a momentum indicator is not strictly speaking true, because it's actually a hybrid indicator. It sort of brings together momentum and moving average analysis, and to form this indicator. And for that reason, incorporating the moving averages in there, I think it works best in a trending environment. And I think that's going to be a theme of how we go on today, so just be aware of that. It works much better in a trending environment. Effectively, the MACD looks at the difference between two different moving averages, which is why you get the name Moving Average Convergence, where they're coming together, and Divergence when they're moving apart. So it's the difference in the levels of moving averages and as to where they are, which gives you the basis for the indicator. It does because it basically measures the difference when the moving averages cross over. It becomes zero and neutral, and hence why the MACD moves around a centre line. We looked at the RSI, which moves between 0 and 100. And that isn't the case on the MACD. It's not. There are no predefined overbought, oversold levels on the MACD. It can move into extreme scenarios, with the moving averages being obviously extremely wide apart. There's no real basis for that stopping. Although I suppose the more you look at the lines, and if you look at a historic basis of the MACD on a specific market, you can get a gauge of what the historical levels of extreme positions are. So you can sort of begin to get a gauge of whether something is a little bit stretched perhaps in the near term, and perhaps a consolidation might be due. But again, it depends on what sort of market you're trading in, whether you're trading in a trending or a sideways market. But it does have still something that you can look at there. Okay. Different ways of looking at the MACD. Well, the MACD is made up of two different moving averages. It is the divisor of the indicator, Gerald Apple. He basically did his studies and found out that the 12-period exponential moving average and the 26-period exponential moving average were the best two moving averages to use. Now, that the difference between those two makes the MACD line, and then you've got a second line which is the signal line, and that is basically a 9-period exponential moving average of the MACD line. So then you get two different lines, and through that I will show you my first chart, if it ever comes up. It would be nice if it worked. Not responding. Happy days. There it is. Okay. Okay. So here we have your MACD indicator. You've got your two different moving averages here, which is the 26 and the 12. 12 being the green one, 26 being the red one, and then the difference of those two make up your red MACD line. And then your 9-day, this is on a daily chart, your 9-day moving average, exponential moving average of your MACD line gives you your signal line. So you've got on this chart, just to show you the different components of the MACD line. Now, also on this chart, you'll notice an MACD histogram, which I will go into in a little bit, but just as a little preview, basically the MACD histogram is a difference between the two lines, and that gives you the MACD histogram or MACD forest, but I'll go into that in a little bit. Okay, so you can therefore, as I said, throughout all these webinars, it is possible to change all these indicators, change the parameters of these indicators that you look at, and interestingly, they give you different signals. Now, when you change the parameters and make the levels fewer, i.e. the fewer the number of days within the calculation, the more volatile you see in the movement of this. Now, what Gerald Appel came up with was 12-day and 26-day exponential moving averages. Now you might want to see a more volatile bit of more volatile signal. So you can cut the number of days you use in that calculation, maybe using, I don't know, maybe 9-day or 21-day exponential for working out the MACD line. And then on top of that, you might want to cut the 9-day signal line down to a 7-day signal line. So you can see that will make it more volatile, and that gives you more trading signals. But again, as ever, the more volatility you get, and the more false signals you possibly could get on your indicator. Now, I'll show you very quickly here. This is on Kiwi dollar. These are the two MACD indicators. This top one uses 12, 26 and 9, at the bottom one uses 9, 21 and 7. Now you can see here that you begin to get the lines changing directions sooner when you use the lesser parameters. So you get, for example, a crossover here. I'll use crossover here, which came 2 or 3 days before you got your crossover on the wider or smoother calculations. Again here, you've got a crossover there, and that came a couple of days before you started to see that. And actually you got a crossover, and you didn't get a crossover, you actually got a kiss before you actually got a proper crossover, which which gave you so it gives you a different signal, but it could even be a false signal. So exactly how you can incorporate that into your trading, maybe, I mean, this is just to be honest off the top of my head, maybe you could, if you were really inclined to use the shorter parameters, then maybe have, as on this chart, maybe have two sets of MACD lines, and the first one is maybe an initial signal, and the second one, once that confirms the initial signal, maybe then you can have a lot more conviction in your trading. So it is still possible, I think, to use the these shorter parameters. Personally, I'm pretty boring when it comes to technical analysis. I will always use I will always tend to use the parameters set out by the inventor of this. So hence why I use the 14-day RSI, and also I use 12, 26, and 9 as my parameters on MACD. Okay. Now, what sort of signals do you get with the MACD lines? Well, you can get several signals, 7 basic signals. These are. I will talk about the actual buying and or the trading signals in a bit. But the basic signals you get is when the MACD line begins to change direction. This suggests a slowing of momentum. Because basically it suggests that the moving averages that had been moving away from each other are beginning to come back closer together, which hence, as I said when I started, the wider the moving averages and the stronger the trend, the stronger the trend, the wider the moving averages, because the trend line will be moving away, and that suggests a strengthening trend. Now, when that trend line or that trend in price starts to tail off, you'll see the moving averages start to come back together again. So that would be when the MACD line starts to change direction, because it's the difference between the two moving averages. Obviously, if that's turning lower, that would suggest slowing upside momentum, and if that is the MACD turning higher, that would suggest slowing downside momentum. So a couple of things there to look at. Also, I think more of an extension to that is when the MACD line crosses over with the signal line, and as the signal line is more of a confirmation tool than anything else, I think this just gives you an early possible trade signal. It is sort of a confirmation of the first one that I was talking about up here, where it's the MACD has changed direction, and then it starts to cross over the signal line. That, I believe, is a confirmation of that change of direction. I'll show you all this on a chart in a bit. The other one being a move through the center line. Well, as I said, the MACD crossing over the center line is when the two moving averages cross over. And anyone who remembers my analysis about moving averages would know that two moving averages crossing over can often provide you with trading signals. And again, the moving averages, say for example, the MACD, if it had been below the center line and it crosses above it, that would suggest that the shorter moving average, which is more sensitive to price, is moving above the longer moving average, which would suggest gaining momentum, so momentum becoming positive when the MACD line crosses crosses above the center line. Equally, a bearish signal would be the MACD line falling below the center line, which would suggest the 12-day moving average crossing below the 26-day moving average. Again, that would suggest accelerating downside momentum, so that's bearish. So then you move on to what you can do with the histogram. As I said earlier, that is the third element, third part of the MACD is the histogram, and that's the difference between the two lines, the two MACD and signal lines gives you the histogram. And it can give you earlier signals. It was basically devised not by the original chap, it was devised about 20 years later, in fact, and it's just gives you arguably an earlier signal in terms of how your trading is going. Once when the bar is positive, that would suggest that the MACD is above the signal line, and as I said earlier, the signal line is a lagging indicator. Therefore, if your MACD is rising, for example, above the above zero, above neutral, that would suggest it's a positive bar. That would suggest the MACD is positive, and the it's moving away from the lagging signal line. So certainly, if the bars are getting higher, then that is a positive signal. It can also suggest to you crossovers and also divergences, but I will go through them in a little bit. Now, okay, so let me take you through this on a chart. So you've got all your signals here. All your signals with crossings, and this is actually a chart that shows all the trading signals, so I've gone a bit too soon on you there, so I'll go back one. Okay, so your crossovers are when you cross over the zero line, your green line here is the MACD. Sorry, that's not even one again. Crikey, here we go, right, fine. Okay, so your red line is the MACD line here, and the green line is the signal line. So once you've moved up above that neutral line and you're moving into positive territory, that is a signal that momentum is beginning to gather in a positive fashion. I think a confirmation of that is when the signal line also moves above positive, because it's a lagging indicator, and it just basically, I believe, is a confirmation tool. So once you get above positive, you start to move higher on the MACD lines, and that suggests positive momentum. When you start to see the MACD turning lower, that would suggest the two signal lines, sorry, the two moving averages up here are beginning to come back together, therefore slowing momentum, and ultimately on this chart, which is sterling dollar, you start to see the MACD falling away and losing momentum on the upside. You get a crossover signal that would suggest that the acceleration and the turning of change of direction is growing and becoming more negative. Once you get back below the neutral line, then you start to get negative momentum once again. That signal turns around when you start to see the MACD lines turn up. You start to get a little bit more cautious about your short position. So, and then that is certainly confirmed when I think you cross back above the signal line, and it goes on and on through this. As I said earlier, it works very well in a trending line, in a trending market. Cable here has been trending higher, and once you get your original bull signals where the turn up and then you cross over, you start to still see further upside all the way through. In fact, you had a slight false signal there because you had a crossover, but then you've got a new signal that once again turns higher. So I think this cable chart does depict it quite well. Anyway, okay, so your trading signals on the MACD indicator. Okay, there are a couple of trading signals you can really get. One is crossovers, as I was just talking about earlier, and then also divergences, as with the RSI and other momentum indicators such as stochastics, which I'll talk about next time. Divergences make a big part of that indicator and use of the indicator in trading. Now, the first one, as I said, is a crossover. When the MACD line crosses above your lagging signal line, that would suggest that the momentum is growing on the upside, as I said, and it's a bullish move, and the momentum is beginning to pull higher and improve. Now, theoretically, or I suppose all the textbooks say that you should be doing this when the MACD lines are in negative territory, is when you get the best buy signals. Although I would actually still argue that I think you get equally good buy signals when the MACD lines have been positive and they correct back towards the neutral line or the center line, and then you get a bullish buy signal again around that center line. I think that also gives you a very good signal. Your bearish signal is your crossover sell, and that happens again in positive territory. Theoretically, this is again theoretically, it's when you've had strong momentum to the upside, you've lost momentum on the MACD line, you then cross back below the signal line, and that theoretically gives you your sell signal. If you want to bring in the histogram as well, as I said, the histogram is the difference between the MACD and the signal line, and therefore when the MACD histogram begins to cross from positive to negative, that would also signify a bearish sell signal as well. Now the good thing about the histogram is it does sometimes give you earlier signals, as you can see in this example here, where the MACD histogram has begun to fall over and start to decline, obviously well before this crossover sell signal. So you're beginning to get a little bit concerned about your long position in this area here, and through this portion of trading, period of trading. And then once you've had your sell signal, that I think is a confirmation of the change of trend. Now you will often find that you don't get too many signals on crossovers with the MACD. So when they do happen, they are far more, I think, high conviction signals. The second trading signal, basically I'm going to go through the theory first and then show you on a chart of the euro. The second trading signal is the divergence. You get both bullish and bearish divergences, as you do with the RSI indicator. On the MACD lines, again, a bearish divergence is when your price continues to pull higher, and then your MACD lines, whilst the price is moving higher, the MACD lines have already topped out and are starting to fall. Now, the ideal scenario would be where you get a scenario with two peaks in your MACD, where you get your first peak in the price is outdone and beaten by the second peak at a higher level, but your second peak in the MACD lines are lower than the first peak. And as you can see here on the MACD forest, you do get your divergence also coming through here. And the opposite of that is your bullish divergence, when you see the price making lower lows, but then your MACD troughs are actually beginning to pull higher. So I will show you that now in a chart of the euro. Now, here we go. Lots of trading signals. So what I'll do is zoom in a bit more so you can see a bit better. Lots of trading signals on the euro. This is since, well, just about 12 months actually. You've got, okay, so I've started doing this back in May 2013. You've got your first crossover trading buy signal there, which equates to around about this day here. What do you see? You see the MACD accelerating away from the signal line, so that suggests positive and growing momentum. Your MACD forest continues to move higher, so that again suggests the MACD is moving away from the signal line. The signal line is a lagging indicator that would suggest accelerating momentum, and then you see this the euro continue to pull higher. You then start to see the MACD forest peak out. And where does that happen? You start to see a lower peak in the MACD forest around here, which in your price you're starting to see a bit of a slowdown, but you actually see a second high, a higher high, and that higher high is coming as the MACD forest is falling. The MACD lines beginning to come together, which is hence why the MACD forest is falling, and then your change of direction in your MACD line, the red line, comes pretty much at the top on that day there, and then you get your quickly, as the decline starts, you actually don't get your, you get your trading signal well, it's actually for some reason between 2 days, but I'll say for argument's sake it's there on that day there. You get your trading signal. Now you could have already started to think, well, okay, my MACD Forest is already in decline, and it looks like you're about to have a crossover. So maybe the more adventurous of the traders out there would have started to already go short. But certainly, if you're running a long position, you would be thinking, wow, there's something going on here. My MACD Forest is falling. My MACD line is topped out. There is something going on here that I need to be aware of, and perhaps I should either shave my long position or close it out altogether. And then you get effectively you get your sell signal within that trend as well. So then you get the sell signal, and then you can be short throughout the next few weeks, couple of weeks, 3 weeks. All the way through. Now, through this period, you've got the MACD Forest, which sort of bottomed out, you could argue, but then it started to push lower again. So that would suggest the MACD is still quite strong. But once again, here, the MACD line starts to bottom out, and through this trading day, it then turns up. You have a sharp correction in the MACD Forest, and then you get effectively your next buy signal on this trading day here, and then you can run all the way through here. Now this is where we get to the divergence, because you're then running your long position through this period of July into August. Now through that period you've got a trading through higher highs, but your MACD lines start to roll over, and you start to get, although yes you've got a crossover signal there, it starts to then consolidate with this. So I suppose if you're trading this live in the market, maybe you would have gone short a little bit too soon, but you've got this throughout this period here. So maybe you're thinking, well, I'm not going to close my short position because these MACD lines are not bullish in any way at all anymore. They're actually beginning to fall over and not really showing any real sign of pushing on. So you've got your divergence, and then you actually do get your acceleration away from the signal line with the MACD line, which I think is a confirmation, because you've had this divergence going all the way through. If you've already opened a short, perhaps it's perfectly possible you've been stopped out on this move here, but I think that signal here towards the end of August gives you another sell signal that I think you've got more conviction with, and then you run the trade position. The histogram gives you an early indication again on this up day here, where the histogram and the MACD lines start to rise, and lo and behold, you actually get what I was saying earlier about the theory behind buy signals is that theoretically you should get your buy signal all the way deep into negative territory down here, but it doesn't always have to be the case, because if you're in a trending market, certainly your MACD lines are tending to be more often than not in positive territory, and even if they do dip into negative territory, which they have done here, then you could quite easily get just a shallow move into negative territory. So just because your MACD line has moved into negative territory, all the while your signal line never moved into negative territory, and that I believe gives you conviction in terms of this buy signal here. And then ultimately you're running this buy signal all the way through this trading period here. You do have a tendency here for another bearish divergence, which is this red line here, where the MACD Forest peaked out, although this bearish divergence wasn't confirmed on the MACD lines. So the question is whether you really trust it or not. You do, because ultimately you'd have been going for a sell signal there, and then ultimately the MACD line started to turn up and actually cross back above there. So maybe that's your stop and reverse signal if you're trading this live in the market. But certainly you've got another move into with a crossover, And not only that, you've also seen, I was saying earlier about the fact that you get, the longer you look at the MACD lines on a specific indicator, on a specific instrument, this is cable, you'll get a gauge of where the overbought, oversold areas come in, where the stretched areas come in. And with this signal line, it never gets back above this sort of level here. So when you get your sell signal there, that would suggest to me that's an extreme sell signal, in a sell signal in an extreme overbought position, and that is, I think, a very strong signal, and ultimately it does work very well. And you move on through here. Okay, so one thing I haven't talked about yet are MACD kisses, which basically are where you get this trading period here. You get a sort of a move into a higher high in December 2013. However, the MACD lines have already peaked out here, giving you a sell signal here. You then start to see the MACD line come up, but it never gets above that signal line, and then starts to accelerate back lower again. Now, I don't know whether there is actually a term of this, but I call that a MACD kiss, where it basically kisses the signal line and then moves away again. And I think that's a pretty powerful signal in technical analysis. I think that is a very powerful signal, and that would suggest to me that you've had a test of that momentum, but then ultimately it does push off again in the same direction. And I think that is, as I said, a powerful signal. And in this case as well, that MACD kiss happens around about here, and ultimately you see a period of downside. Here we're coming back in with a bit of a bullish divergence on the histogram, where you see a period of lower lows. See the histogram starting to actually make gains, and that would suggest to me that you need to be careful of your short position if you've got one on, and ultimately, indeed, you do get again a little bit of a false signal here, but then you get your second crossover here, which ultimately does work very well. Another bull kiss here, where the MACD lines have come together, but then accelerated away. MACD accelerated away from the signal line, so that is, as I said, a strong signal. So I could go on about the MACD lines all day, to be honest, and certainly on this chart you have had a lot of signals on the euro. So you do tend to get a lot of signals with the MACD lines in trending environments. So the euro has been a very good trending instrument over the past months and years, and I think that is one of the reasons why it has been so successful. Now, you could ask the question whether it works on different timescales. Well, yes, it does, because this is the euro on an hourly chart over the past, just over the last few weeks, really. And you'll see here. Actually, sorry, I zoomed in too far. There you go. Okay, so you got a series of crosses and divergences that all work pretty well. As I said, watch out for trending with the MACD, because, as I said, signals that come at the end of strong moves, strong trends, tend to be the best ones you can get with the MACD lines. And what do we get here? Well, you've had a crossover, bear crossover here, early in August, and that crossover works pretty well. Strong move to the downside. You've then got a bullish divergence, where you've got a continuing to the downside, and you get your bullish divergence. Now, again, you could argue, I'm sure someone would probably pick me up on it, the fact that you've had a bullish crossover buy signal, and yes, again, maybe you've been stopped out of that position, but when you get that bullish divergence, which is the second signal, I think you can trade that with a lot more conviction, and ultimately you do get a strong move to the upside in due course. You get a little bit of a fluctuating bit of trading here. Ultimately, then you get quite a strong move to the upside, but then you get a crossover sell signal, and that crossover sell signal is the start of 2 days worth of a very strong trend in the MACD. Both the MACD lines and the price are strongly trending down to lower. Very strong trend, and nice position you would have run throughout that, because you only actually get your reverse signal back down here, which again is a signal that comes at the end of a trend, which tends, as I said once more, tends to be a very strong signal, and ultimately it did work pretty well to the upside. So yes, in answer to any questions, yes, the MACD lines do work very well again with across the hourly signals when it's a strong trend. I will stress that again, when it's a strong trend. Okay, so seeing as we're doing FX charts, I'll just very quickly run through how all the majors do with MACD lines. As I said earlier, the RSI does tend to work. Sorry, the euro does tend to work pretty well. So we've pretty much covered that to death. Sterling was a very strong trend here throughout from June 2013 all the way pretty much for a year. Sterling rallied all the way, and hence you get a series of signals, pretty much everything coming above the neutral line, the crossover line with the MACD in positive territory once again, because you're in a trending market. Now, as I said earlier, I think in a strong trending market you can say that your buy signals that come around the center line are pretty strong signals, and signals that you need to be going for. So here you've had the MACD line just fall below and then cross back above, and I think that's a pretty good buy signal. Maybe just moving back a little bit, if you're long of this, sorry, your original strong signal here, which has come at the end of a long, almost a month-long correction in June 2013. You've got a buy signal, and then you're with that buy signal all the way up. You've got a kiss there again, which is helpful, and you're all the way up probably until your crossover signal that comes in here. But then maybe you're still in that long position, or you've just closed out the long position because you've had the corrective signal, but then you've had another buy signal here that actually ultimately gives you another move to the upside. Probably that is your that crossover there is your profit trigger. But then once you maybe not then using the MACD lines through this trading period here, but then you get your nice bull cross here, and then you're running it all the way. Again, it's a little bit, maybe that is a bit of a profit trigger signal through December, but all the way through here you've got a series of strong signals. Now, trading against the trend, I've always warned you, trading against the trend is a risky game. I would prefer to look for buy signals in an uptrend rather than trying to take sell signals, because I think that is one way that you can ultimately lose money. Okay, so that's the sterling dollar working very well there. Japanese yen is probably the one that doesn't work. Now, the reason it doesn't work is because there's no trend. Although I will talk about yen breaking out in a minute. But still, over the past 3-4 months, there's been no trend. In fact, throughout 2014, there's been pretty much no trend, and hence why I think trading the MACD lines with Japanese yen is very, very risky, because there's no trend. Moving averages don't work on the dollar yen, and the MACD lines give a lot of false signals. So that is one of the reasons why using MACD on dollar yen is not a great thing to do. Okay, Swiss franc. Again, a pretty good, in fact, a pretty good trend throughout late 2013 into 2014. So you're looking for your sell signals, certainly I think throughout then. That one's worked pretty well. Again, September, you've got a very good sell signal. Rally, you could argue you've got a bullish, I haven't drawn it, well obviously I haven't drawn it in, but you've got a bullish divergence here on your MACD lines, and then your second signal there. But then I think that is a pretty good sell signal. Again, I think buying into a downtrend is a risky one, so maybe you'd be avoiding that. But then you get your sell signal there, and then you run that for the next couple of months. Again, buying into a downtrend is not always the best strategy. But then you start to see dollar Swiss bottom out. And that bottoming out process has been taking quite a while, but I certainly think dollar Swiss has now bottomed out, and that looks like it's going to be coming up here. But hence why maybe you're now turning around and you're looking for the buy signals on the MACD rather than the sell signals, because it looks like it's changing trend. You've seen a higher key low, and maybe that is a second key higher low there. You've broken out above a key reaction high and a second key reaction high, so I think the trend is certainly turning around in dollar Swiss, and you'd be looking for your buy signals now using the MACD. Aussie dollar, again, in the last few months, Aussie dollar's gone nowhere. You've had a fairly decent trending period through the first 2 or 3 months of the year, but now in the last 3-4 months it's gone nowhere, and hence why I think using the MACD lines on the Aussie dollar is a bit of a difficult one to justify, because, as I said, no trending market or a sideways market is a risky game. Okay, and finally CAD. Now CAD, I think, has been historically pretty good, because once again you use a strong trend, so you look for your buy signals within this strong trend. Once you've turned the corner, I think probably you're starting to use buy signals here. So you'd look at that as a buy signal. That is your profit trigger up around here. You start to then meander around. And does that now mean you've topped out? Because it certainly looks like it on dollar CAD, where you've created a top pattern, so that means a trend reversal. So maybe you're now looking for your sell signals. And what have we had recently? A sell signal on dollar CAD. Interesting. Now, does that now mean that dollar CAD will be pulling lower? Well, it looks like it's still thinking about it, because the red MACD line has turned up. But I think if you get a kiss now and it starts to accelerate away downside, that would certainly suggest, in my eyes, that the dollar CAD is coming lower. But we'll wait and see how this one pans out, because it's a little bit unsure at the moment. It's sort of trading. Had a strong day yesterday, and maybe that's going to signal that this was a false move at the moment. But we'll wait and see what happens. Okay, so that sort of concludes my MACD chat. But what I will do now is take you through some of these markets and drag in a lot more of these indicators that we've been looking at over the past few weeks. Starting off with the euro. Now, wow. I'm really upset about this, I'm not going to lie to you, because I've been talking about this bullish divergence on the RSI for ages, and you had the RSI improving higher lows. You actually had a slight crossover buy signal on the MACD, and also a bullish divergence on the stochastics as well, and it looks like it's failed, and I'm really not happy about that. Dear. So what do we do with the euro? Well, it looks like it's pretty horrendous, to be honest, because if you zoom out here, you've got this big top pattern that gives you a downside target of $1.30, and it looks like at the moment it's not stopping. It's just today broken below that key November low, and again, as I talk about some of the other Forex pairs such as dollar Swiss, November lows are a very key resistance or support, depending on which way you're looking at these Forex markets. But yeah, euro dollar has fallen below that key November low, 32.95, currently trading around 32.88. Doesn't look happy at all anymore. Once again, it's breaking down, and that now suggests, I think, if that certainly if it closes below there tonight, I think it would suggest that the bears are back in control and looking to retest certainly that September low, ultimately in due course. Zooming in a little bit, you'd argue that what's your resistance? You'd be looking at that support that comes in around 130, 330. So any sort of rally back towards there is now, I think, a chance to sell, because I think, unfortunately, and I'm really not happy about this, unfortunately I think these bull divergences are not working. Although you would still argue that they are, for the moment at least, intact, because you've got a lower low that's surely going to be seen, well, it is going to be seen on their price, but yet the RSI is only at 28 or 29, and that low there on the RSI is 24. So you could still get a bullish divergence that continues on this RSI, but it doesn't look great at the moment. Cable. Oh, oh, it's just so painful, cable, isn't it, if you're sterling bull? Okay, I'm going to have to redraw that because I haven't done that there. So it's got all those three peaks making the downtrend. But look at this, every time you get a slight bounce in cable, you get an acceleration lower, a couple of days, an acceleration lower, a couple of days, acceleration lower. What we're seeing today, a rebound. Maybe it's going to last, and it might not even last for a day, because obviously we've got the FOMC meeting minutes tonight. If they come out hawkish at all, then I think cable's going to just rather fall away again. But certainly it looks like at the moment it's just going to be another technical rebound. There's nothing really positive about cable whatsoever. Hold on, I do believe I've got a question. Any strong view on Fed meeting minutes today? Okay, cool. I'll just finish talking about this cable chart, and then I'll talk about Fed very quickly. So yes, I think any rebound in cable back towards 66.50 up towards 67, I think is a chance to sell. That downtrend comes in at 67.60 at the moment. So I think ultimately it's going to be another chance to sell. You've got this RSI now bumping along around 30. That just suggests very, very weak momentum. Look at these MACD lines, still very negative, not really showing any real attempt at a bounce, and also the stochastics as well remains very negative. Again, I'll talk about that in a couple of weeks' time. Now, in terms of downside targets, I think you're looking at certainly the April low around what's that, 65.50, and then unfortunately I think we're going to see 64.60 as well, which is that March low. I think breaking down that 67 support on cable has been a pretty big disappointment for me, certainly, because you had these big supports April, June, and then you you could argue that attempted a little bit of support there, but yesterday it was such a big move, such a bearish move on that inflation data from the UK, and then subsequently the housing data from the States, that I think cable is under real pressure now. I think if there is any technical rebound in cable, I think it's just going to be near term. I think it's going to be just chopping around, because ultimately I don't see cable moving. I don't think it's going to, certainly I can't see it back above 170, and I think any sort of rebound is going to be a chance to sell. I think there's several areas of key resistance now on cable that I think would suggest that the bears are in control. Now, in terms of the Fed meeting minutes, I don't think there's going to be anything. Maybe Charlie Prosser might well come out with an attempt to try and persuade the hawks to come out of the woodwork, but I think more likely is that Yellen will continue to remain pretty dovish, and I think moving into Jackson Hole again, I think she's going to stay pretty dovish. I don't think there's going to be any real hawkishness yet from the Fed. I think that the drive to keep rates at lower for longer is still there from the Fed, and I don't yet see the hawks really taking control yet. I mean, having said that, you did get a surprise in today's BOE meeting minutes, with 2 members voting hawkish for a rate rise, but I don't see it happening quite yet in the States. I think they're still a little bit cautious, or more cautious than we are. But again, as I said, again, Charles Prosser might well try and move that agenda, but it'll be interesting because the Fed meeting minutes are a big mover of the market. But I think the market also will be now looking towards Jackson Hole and how Janet Yellen comes across there, whether she remains pretty dovish, because obviously she has a big voice on that committee. Right. Dollar yen. Now dollar yen, massive move. Last few days, big move, and I've been so disparaging of dollar yen over the past few months. Trading sideways, so difficult to really call it because of these moving averages are basically doing nothing. Also, in a sideways market, the momentum indicators also become very difficult to trade. But I think you're now getting a bit of a change around just on the back of this breakout. Now, I spoke last week about the RSI being in a sideways trending market. The RSI moves between, say, 35 up to 65, and then you sort of use any sort of moves towards the extreme as a chance to sell. And certainly that would have been a very good way of trading dollar yen over the past few months. However, I think this move here was a bit of a warning shot across the bows as the RSI went to 70, because you've now got the RSI above 70, and I think that RSI pushing above 70 means that it's trying to really sustain this breakout, and it looks yesterday we had a close at a 4-month closing high, sorry, and today we've had an intraday high at a 4-month high level. So I think we're now going to be, certainly if we're closing above 103 big figure tonight, I think that would suggest that the bulls are beginning to really get hold of this now. I think push towards that 104.12 mark would ultimately be seen, and I think the outlook is improving now on dollar yen. I think it certainly suggests that the dollar bulls are gaining power over the certainly the yen. So yeah, increasingly it could be could become an interesting chart play once again. Certainly if we come back and find another higher low. We've had one around 101, and then 101.50, and then another one at around 102. So it'd be interesting to see if we have another higher low on a correction around 102.50 on dollar yen, because I think that would then start to suggest that we are looking at a more bullish outlook on dollar yen. Okay, so let's look at gold. I hate gold. It just does nothing at the moment. It's so difficult. The last month or so has just been an absolute just nightmare trying to look at gold and talk about gold on a consistent basis, because it's been, first of all, it's been moving around on geopolitical events which make it incredibly difficult to call on an intraday daily basis. And now you've got all these momentum indicators in neutral configuration. Look at those MACD lines, bang on, pretty much bang on zero. RSI just drifting, not really doing anything. It's sort of in the last month or so, it's been between 40 and 60 and not really done anything. Stochastics also not really doing a great deal, to be honest. I mean, a slight bearish bias, but to be honest, that's only because we've been falling for the last 4 days. But there's no real selling pressure that's coming through. But I just think that it's going to drift possibly back towards that 1280 mark. Obviously, if Russia kicks off again, then that could well start to add the war premium back in to the gold price. But at the moment, it just looks like without the geopolitical element that's been driving gold higher, I think that will suggest that gold will come back towards that 1280 point and just retest it once again. But it is very difficult on a day-to-day basis. But the last 4 days has been lower, so you'd say that there's a bearish bias there. Okay, so indices. Oh no, let's look at silver, because I like silver. Good trend on silver. I mean, like, you look at how gold has been just basically going nowhere. Silver has actually formed a pretty good downtrend in the last month or so, and all these indicators are now looking bearish again. MACD line's bearish, RSI bearish, stochastics bearish. Continues to form lower highs and lower lows throughout this zigzag, step decline, whatever you want to call it. And using the previous breakdown, 1969, as the resistance in the last couple of days, 1968 on Monday and 1970 on Tuesday. So it remained, that is certainly the key, the resistance near term, 1969, that you'd be looking out for. So any sort of rebound, I think on an intraday basis, you'd be selling on a silver. And that sort of backs up the whole bearish bias that you've got going on with gold as well. Okay, so .SPX, S&P 500, back in game, aren't they? The bulls, they're looking good. Are they going to retest that high? Well, I mean, yes. To be honest, it looks fairly strong. Momentum indicators all turned around. You could actually argue that's a pretty good buy signal on that MACD cross. As I said, because you've had over the last few months such a strong trend in this S&P 500 that any sort of buy signals that you see as a slight crossover below that neutral line, I think would be a decent signal, and as it is proving to be, I think we're going to get a retest of that 1991 high, and ultimately pushing towards 2000. There's nothing really in this chart that suggests otherwise, because it looks pretty strong at the moment. And yeah, I think it's you're looking okay for upside in the S&P 500. DAX, ooh, here we go. .G DAX I. Wow, look at that sell-off and the rebound as well. If I looked at the DAX on an intraday basis very quickly, you've got a very nice base pattern. Then shoulders reversal, depending on how you want to draw the lines. Shoulders, head, shoulder. You actually get an upside test from upside target, sorry, from that at 94.90. You've also had a slight breach of that neckline, but that the right hand shoulder was not breached, 90.50. So the pattern remained intact, and you're also now trying to build once again to the upside. Bit of a slight disappointment today, but I think that will probably be used as a buying opportunity. MACD lines still positive on the hourly, and stochastics just turned up again. So maybe this little correction we've seen today is a buying opportunity. 94.90 is that target. Oh, neckline stays in. Happy days. Okay, so in terms of resistance levels, 94, big figure, comes in time and time again. Resistance there, then used as support. Resistance, although minorly broken, then used as support. Back, support again through April, May. Back down through there so that now becomes a resistance. So 94 big figure is something you need to keep an eye on. Again, 96. Resistance, support, comes in as a resistance. So then you've got 96 above there. So 94 big figure, then you've got your implied target at 94.90, and then 96 big figure. So a few levels on the upside to watch out for, but as I said, that head and shoulders reversal at 90.50 on the downside is where you need to be looking out for. That neckline around 9200 is your initial neckline support on the DAX. FTSE, pretty much quite a similar chart actually, but one thing that I noticed when I was doing my mid-morning analysis was on the intraday hourly, that through this, I mean, look at this 21-hour moving average, not just at the beginning of August, but it started to become a pretty decent gauge, and it has been used as support throughout on the way up. Now we've broken back below it, so that would suggest you're a little bit concerned. I think you've got your breakout support there, which, as I said in my morning update, sorry, my midday update, that if that starts to break down as support, then you need to start thinking about whether you should be long on FTSE. It seems to have held on an hourly basis, this is, but not only that, you've got a negative divergence on the RSI. You've got your MACD lines that have sort of started to accelerate to the downside as well, so should we be a little bit concerned about this? Maybe on the upside, but FTSE is a lot more orderly than the DAX. Now the problem again we've got is if this rally on the FTSE doesn't now breach that 68.34 mark, you've then got the instance where you've got yet another lower high. So 1, 2, and that would be a third lower high. Now that could be pretty damning in terms of the bulls. If you're going to go on RSI, then you'd start to think, well, okay, we rallied up towards that 60 mark again, which is where each of these highs have all come in. Is that now the limit again? So a few questions I think that need to be asked of this FTSE chart. So yeah, lots to think about there on FTSE, whether this rally is limited or not. Okay, so I've taken you through quite a lot there. You do have the PDF document of this webinar that I hope you should have read and understood, and I think it's a good guide. The next time we're looking at stochastics, which is in a couple of weeks' time. Again, an indicator that I think is worth having a look at, as you do get a lot of good signals. My Twitter handle @HantecRich is always there, and I'm always happy to engage with people if you're asking questions or anything. And any questions, comments, or feedback, it's marketing@hantecfx.com, and I'm more than happy to answer any of your queries that you might have. And that just leaves me to show you the disclaimer once again, because the regulators demand it. Anyway, I wish you good luck in all your trading. As ever, MACD I think is a very good indicator, and I hope that I've helped you just understand it a little bit more today. So I wish you good luck in your trading, and thank you very much, and I'll speak to you next time.